Good afternoon and welcome to Cracking Crypto, where we break down the projects in the Web3 ecosystem that are changing how we view finance. I'm Asher Westrop Evans. Now, before we get stuck in, let's take a look at those crypto markets. And markets seeming to have found some stability and, dare I say, going up somewhat over the weekend, with Bitcoin now trading steadily around that $17,000 mark, pushing there, as we can see, even into the mid 2000s, while ETH seeing some strength, heading very close to those $1,300 levels. Generally a bit of a bullish move there in the crypto space, while the overall market cap hovers around that middle $800 billion mark. And turning now to news, and digital asset trading group Genesis and its parent company Digital Currency Group owe customers of the Gemini crypto exchange around $900 million as the collapse of FTX reverberates across the market. On November 16, Genesis temporarily suspended withdrawals, citing an unprecedented market turmoil days after disclosing around $175 million worth of funds was stuck in an FTX trading account. Genesis is reportedly facing difficulties raising money for its lending unit, but refuted speculation of its, quote, imminent bankruptcy. And elsewhere, another multi-million-dollar hack has hit the decentralized finance space. Binance chain-based DeFi protocol Anchor, addressing the hack, Binance said the crypto exchange has paused withdrawals. A vulnerability in Anchor's code enabled unlimited minting of tokens. Anchor confirmed the attack and added it has reached out to other decentralized exchanges, urging them to block trading. Tokens will be reissued after it completes assessment of the situation. And turning now to take a little look at a chart of the day. As we can see here, this one coming from Reuters, a bit of a pain in crypto land. This just summarizing the last year, 2022, the calendar year for Bitcoin. Some of the key events that we can see moved markets there, from the invasion of Ukraine by Russia to the Fed beginning that ever-increasing rate hike approach to, of course, that big drop we can see when Celsius froze withdrawals, and a seemingly relatively small blip when FTX did the same thing. It has been certainly a challenging year in the crypto space, and a very different tone to that struck in 2021. So, with all that in mind, joining us now is Michael Milmeister from Stormrake. Michael, firstly, thank you so much for taking the time to come be here with us.
Great to be here in sunny Sydney. It's beautiful.
It is not too bad here, isn't it? But, you know, things aren't so sunny in the crypto space, where that winter is going from strength to strength, despite some short-term bullish trends we've seen in the last 24 hours, let's say. But, you know, really, I'd love to get your take on the market overall, where we stand right now. What are the key data points we should actually be looking at?
Yeah, super interesting in what you've just shown there. Those last three events are very much related to each other. You know, we started with prior to Celsius, we started with Luna obviously having those issues, and Celsius went under probably because of exposure to that, and then obviously FTX had exposure again through Alameda, and so on it goes, and it keeps going, and then obviously BlockFi now having exposure again to FTX. So all of these things have snowballed, and it's put us in the place that we are at the moment. But yeah, it's fascinating. It's an interesting market because we've reached a point where all that news has been absorbed, and you're seeing a day like today where there's not a huge amount of news, but the market's slightly up, and that's because we kind of see gravity kind of being reversed. All the news has been priced in, and it would take something significantly negative for prices to go lower.
Perhaps whereas, like Gemini going under, and...
well, even Gemini is already kind of known, right. And it's not that huge compared to FTX. Mm-hmm. If the parent company of Gemini went broke, that would be enormous, because that's, of course, the Grayscale fund, and that is the largest owner of Bitcoin there is. Yeah. If they have problems, or if they don't have the Bitcoin, then we've got huge issues. But it seems like they've shown that they do have the Bitcoin that they are purported to have, and hopefully that's kind of a backstop to the market. And now it can slowly start to rise.
Yeah, waiting for that tide to turn. And it's interesting to look at some of those key data points and metrics that we're seeing play out in the market.
Yeah.
You've even brought us some charts today. If we pull up that first one, talking about the volume that we're seeing on monthly exchanges. Break down a little bit about what we're seeing here and what's the key takeaway.
Yeah, so what you're seeing there is all the different exchanges. It's a stack chart showing all the different centralized exchanges and how much volume they have, which is basically just total trading on those exchanges. With FTX going to zero, obviously, because of their bankruptcy, you've seen all of that flow go to Binance. And Binance is now 75% of all of the volume of all centralized exchanges, which is incredible. In a space where anyone can go and start an exchange, and there are so many exchanges, to have one player that is dominating the market by that much is pretty incredible. So it's put Binance in an interesting position. On the one hand, they're the market leader, they're very dominant. On the other hand, if something goes wrong with them, then it would be very significant.
Yeah, I mean, a couple of potential pain points we've addressed just there, within this market. If for a market that purports to be so decentralized, to be so spread out, and obviously, as you said, you're just talking about centralized exchanges here, not decentralized, but there's a lot of pressure being put on a player like Binance. And in the meantime, we're seeing Bitcoin flee the market. Isn't that right? Come off those exchanges and get pulled out.
Yeah, absolutely. That's happening as well.
can see
on
that
on that chart there, I'll just explain that green blip at the end is a one-off with Binance reorganizing their own wallets. They have some of the biggest wallets in the space, full stop. But you can see all those large red lines in November. That's over the last month since FTX has happened. That single event has caused a huge amount of outflow of all crypto, not just Bitcoin, but that is a Bitcoin graph. And what that's meant is supply on exchanges is extremely low. So it wouldn't take much to move the market either way. But given that that's outflows, it's actually a positive sign for a rebound in the market.
Pretty much because we're so negative and things have been so bad, the only direction from here is up? Is that sort of the thinking?
Kind of, yeah. So it's all priced in, but also just supply and demand.
Right.
As there's less supply for the same amount of demand, you'd expect the price to rise. Which
segues nicely to a point I'd like to bring up, something that you've mentioned before, the idea of paper Bitcoin. Now, explain that a little bit and tell us why, the difference and disappearance of that supply might actually be that sort of positive news.
Yeah. There's a couple of things there. Obviously, another reason that the prices could rise is that when you've been trapped on an exchange that's gone broke and you thought you had Bitcoin on that exchange, you actually realize now that you don't, because that exchange never had it in the first place. That's FTX. You've got to make a decision. Do I buy that Bitcoin back, or do I sit on my position of zero? Yep. And in most cases, people are choosing to buy that Bitcoin back. And so it's an interesting situation where you would expect an exchange going broke to be extremely negative for the price, because there's kind of all these risks around and people are panicking. But on the other hand, all the people that had Bitcoin, thought they had Bitcoin on that exchange, have to go and buy it back. And that is another bid in the market, and that causes the prices to go up. So that's the dynamic that's playing out. So what we mean by paper Bitcoin is Bitcoin that's potentially, paper Bitcoin can be also derivatives, but in this case, it's Bitcoin that you thought you had, but you never actually did. It's not real, it's not there. Yeah, there is only 21 million Bitcoin, and you could see which wallets that's in, but when there's a centralized exchange involved, you can't quite see through to make sure that those Bitcoins are actually there.
Yeah, that's certainly an important lesson, I think, for many people. And it's not just the sort of retail consumer that's going out and repurchasing, correct? I mean, we keep hearing constantly about whales, accumulating during this time, institutions really taking into the crypto space and buying up that Bitcoin while it's cheap. Hell, the country of El Salvador is tripling down at this point, we'll call it, and buying more Bitcoin. What sort of impacts and plays do you see that having on the market?
It's absolutely not just retail. FTX specifically was actually a place that institutional investors traded quite significantly. They were, in terms of use, probably the best exchange there is. It was an incredible product. despite what's happened now. It was a great product, and that's why so many people trusted it. And that includes a whole swathe of institutional investors and traders and market makers and kind of that middle range of company. There was also derivatives on the FTX exchange, which were heavily used by those guys, whereas retail is more likely to use spot. So, yeah, as a result of FTX going broke, those guys have been hit really hard, and potentially they're out of the market, which kind of brings us to where the market is today. And it's interesting that we've almost gone back to the dynamics of 2017, because there's less derivatives in the system, there's less paper Bitcoin because all those guys have been flushed out, and you've just got traders trading in spot. With less market makers. So the market makers are guys that come in and make it look like there's a lot of volume in a market, but when there actually potentially isn't. And traders just putting on different positions. With those guys gone, it's a pure market. It's just back to normal trading. It's the real price of all of those coins.
Perhaps a more realistic reflection of what's actually out there. And we've obviously seen that in the overall market cap falling from close to $3 trillion, so it claimed, if it ever really was, that amount there, to, down to around 800 billion as we stand now in terms of the overall crypto market cap. But I suppose I wonder, coming from that perspective of trading, what are some of the options that people can see? What are some of the trading strategies that people could be using out there at the moment, or that you over at Stormrake have seen in the last, let's say, month or two?
Yeah, last time I was on the show, we mentioned a couple of strategies that traders out there were using. One of them was the straddle or the strangle, which is an option strategy where you buy both the put and the call, and you're essentially buying volatility. And that would have paid off quite well if you did that a month ago when volatility was super low, nothing was happening, and then all of a sudden we get FTX, we get all the contagion that's happened since. So those puts would have paid off really well because they give you the right to sell at a certain price. So that would have been a great strategy. Another one we discussed was the Arbitrum farming strategy, which is without going too far into it, a layer 1 protocol. That's very close as well. So we're hearing that there's a good chance in December, this month, that will actually drop. And in which case anyone that's using the Arbitrum network could benefit quite well from an airdrop. And of course the other strategy was DCAing into Bitcoin.
Right, tried and true.
You should still be doing that. And for some of the reasons that we mentioned before, that paper Bitcoin's out of the system. And everyone's taken their Bitcoin off exchange, they're holding it themselves. That's the Bitcoin that is actually real, right? So if you want to get your hands on some more Bitcoin, well, there's not much left on exchange. You have to buy it from someone. And that price is going to keep getting bid up and up and up. And slowly, you'll notice that price rising.
Just briefly, we're running out of time, but I think about something like we were talking about Grayscale just before, and their Bitcoin Trust, which was running at a close to 50%, below net asset value in the last couple of weeks. I think it's recovered slightly since then. I haven't checked the latest recently, but I mean, is that presenting a great buying opportunity now that they seem to have confirmed that they actually have the underlying assets?
Yeah, and that's really the caveat. If you believe that they have the Bitcoin, it could be a great trade. It could be. If, as an Australian, you can access those shares, because it's obviously listed in the US, it could be a great trade. So if you're buying Bitcoin for $8,000-9,000, that's pretty incredible, as long as they actually have those Bitcoins.
As long as at the end of the day it all comes real and it all comes good. Well, important questions for everyone to consider about the entirety of the crypto space. Michael Milmeister from Stormrake, I want to thank you so much for taking the time to speak with us today.
Awesome to be here. Thanks, Asher.
All right. And that's almost all we have time for today, but I will just flag some new news coming out now that SwiftX has just reported to have fired 35% of its workforce, making them redundant, they say, as a result of the collapse of crypto exchange FTX. As we can see, those ripple effects taking place even here in Australia. The Brisbane-based firm, as I just said, laying off 35% of its workforce. Pretty significant numbers, and perhaps we'll see more across the crypto employment space here in Australia. Anyway, that is all we have time for. We'll be back with more of your Web3 info and knowledge tomorrow at the same time. In the meantime, the trade is up next. I'm Asher Westrop Evans. Thanks for watching.